Hey, what's up, guys? I'm back. This is Tegrity. I just wanted to kind of get back into um, some educational videos just because I believe when you teach others, you actually learn more yourself. So, this next video is going to kind of be like the CME tools video. These are just some additional tools that you can use when trying to plan out a trade. This is especially useful when um, you're trying to swing trade specifically, but you can use it for intraday stuff as well. But this will just give you a bigger macro picture of the markets. So let's get started. Yeah, I'm just gonna go over three things, so it'll be short and sweet. But these things have been super helpful to me, and if you, especially if you're new, they can be helpful to you as well, I believe. So let's get into it. So the first thing, obviously, on my screen that I would think most people look at, but maybe don't put much weight on, is going to be your option expiration calendar. So the derivatives market has overtaken the equity market. So the stock market is derivatives at this point, and you can get more information on that from Sem or Jim Carson on Twitter. He's online. He's a wealth of knowledge. He provides insights into basically options market and how the market tends to follow some of these quarterly and monthly expirations. So the biggest thing is you're not trying to dive too deep into it. Basically, you want to be aware of your major expirations, specifically for VIX, your volatility product, and obviously your options. You'll notice if you just backtest and track VIX specifically, expiration dates tend to coincide with uh, pretty big reversals depending on the time of the year. Now, you're going to want to put more weight, obviously, on your quarterlies as opposed to your monthlies and things like that. And if you just start tracking those simple things, looking at your, whether you're trading futures or equities, whatever it may be, start looking at, when does the VIX expire? So, for example, we're in October right now. So you have your VIX expiration. Last day to trade VIX was the 15th, and then your expiration would then be the 16th for your volatility products. So just look at price action around these dates. Again, quarterly's huge. A lot of times it coincides with reversals, and if you think about it, it makes sense, right? So we have all these dudes, big money or whatever you would call them. They have to get back in positions after their shit expires. So they're gonna reload. So if they want to sell puts, obviously you're gonna have a reversal to the downside so that they can get in, and then the market will then rally again, or vice versa. So the market tends to move based on their new positioning. They're gonna get positioned at a certain price, and then the market's going to do what it's going to do. So just pay attention to that. It's super helpful. You don't have to get into the weeds. I don't. I'm not looking at fucking option chain uh, bullshit all day, every day, especially not anymore. I used to try to get into it, but I'm not that smart. So I just kind of look at the dates and track the market and see what happens on those quarterlies and monthlies and end of year and shit like that. So just keep an eye on it and then see how the market reacts and see how that you can position yourself alongside some of these guys, and maybe you can get positioned for a good swing trade depending on market price and your target and shit like that. But yeah, all you got to do is Google option expiration calendar. There's a shit ton of them out there. Look it up. Start watching price around the days and annotating either in a notebook or Microsoft Word, whatever it is, what you see. Start tracking that year over year. Especially this year, we have a lot of volatility. It's election year. It's um, up and down. So yeah, just track it, annotate what happens, and then continue to basically grow from there. It'll help you uh, be it'll help you basically be more attuned to those specific days when you have the volatility products expire, or you have the option expiration or the quarterlies, because when you don't have that in the back of your head, or you're not aware of it, you can definitely get fucked hard. Especially some of these into these expirations, the price action, it just it'll make no sense. It'll go up, down. There will be no technical analysis that you could use. It just basically fucks everyone, and then we'll continue from there. But yeah, just something to think about. This next one's pretty cool. And this was brought up to me by a guy who he's on Twitter. I can share more information on him if you want. He doesn't have a room or a mentorship, or he doesn't sell shit. Um, his name is Yusuf. He's a really good dude. I think he lives in England or some shit, but he's really, really attuned to a lot of macro stuff that I never heard of. And when I came across him and I started looking into the shit myself, I was like, holy shit, I never knew about all this stuff. And it's super helpful because, you're just adding another tool that you can use. So again, I can give you guys his handle. I'll probably post it in the notes at the bottom of the video. But yeah, he's a really smart trader. He's really well versed in some of this macro stuff. So let's get into it real quick. So before I show you the chart, I just want to, you can just Google search the NFCI index and click on the first link. It'll give you more information on it. Now, I'm going to be honest, I don't know what all this shit means, but I do know how to look at a chart and see when reversals happen and how they coincide with this index. I know it has a lot to do with Fed intervention, but other than that, I'm the wrong guy to ask about this kind of shit. I just want to make you aware, and you're probably smarter than me, so you could probably figure out what the shit means. But if you're just trading, it really doesn't matter what it means, right? Like, when you're trading equities, do you give a fuck what the company does if you're a technical analysis trader? No, you don't. You just trade the fucking price action, cash out, and go along with your day, or take a hit and go along with your day, whatever it is. But I kind of look at this in the same way. I'm not going to waste my time getting into the weeds, but I'll talk about it real quick. So what is it basically at the top? So this index is produced by the Chicago Fed, provides a comprehensive weekly update on U.S. financial conditions. So when you look at this, remember, you're only going to be able to look at it on your chart on a weekly basis. It's not traded, or it's not tracked intraday. It's not even tracked day over day. You can only pull this up on a weekly chart. So just keep that in mind when you're looking up this ticker. The ticker is NFCI, and I'll show you guys here in a minute. So basically, a weekly update on U.S. financial conditions in money markets, debt and equity markets, and traditional, as well as shadow banking system. Whatever the fuck that means, your guess is as good as mine, but it sounds kind of cool. It says because the U.S. economic and financial conditions tend to be highly correlated, we also present an alternative index. I haven't used the alternative index, which is this ANFCI, but it's basically kind of like the NFCI, just the complete opposite. So it's the uncorrelated version. And basically the ANFCI index isolates a component of financial conditions uncorrelated with economic conditions to provide an update how financial conditions compare with current economic conditions. So a lot of Fed shit, I'm guessing, Fed intervention, Fed tools, shit like that. But I want to show you guys something really cool about this ticker, especially if you're a swing trader, if you work full-time like me, and it's hard for you to sit in front of the fucking charts for 8 hours a day. I mean, I don't want to do that anyway. That shit sounds gay as fuck. But yeah. So if you go on TradingView or any broker or trading or charting software, just put in, see the top left, you're going to put in the ticker NFCI. Make sure it's on a weekly or it's not going to populate. So the NFCI, this is the blue line. The up and down blue line. And what I did was I transposed the ES, which is the S&P 500 for non-futures traders. The red line is the ES market. Now, this is really, really cool, I think, because if you notice on these huge run-ups on the NFCI, when we start topping out, what do we do on the S&P 500? We start taking off. right? Uh, this is a good one as well. So let me look at the time frame. So this was around January of 2020. We had a huge dip. Obviously, that was fucking COVID. This was COVID. So obviously, the Fed intervened. But this huge drop, you could have pulled up the NFCI and you could have looking at this starting to accelerate to the upside. And obviously, that tells you there's some kind of Fed intervention. You can start looking to position yourself long. And look what we did from there. We just fucking tore ass. Down here, this one is a little less obvious, but me personally, I've been trading for about 4 years solid. I'm I'm not the best at technical analysis, but I mean I can look at lines and kind of figure out what the fuck's going on. But this one a little less obvious. We have basically kind of a 2 or 3 drives pattern down, 1, 2, 3, and then look up here or look down here at the NFCI. We got a few drives up, 1, 2, and then for whatever reason, it's always these big moves occur, after the third. So we've got 3 drives down on the ES, 3 drives up on the NFCI. Then we could tell ourselves we could position for a long, especially if you're a swing trader, and you just fucking rally up to where we're at right now. It's pretty crazy. It works. It's highly correlated. Obviously, um, it's a little more obvious when you have these huge runs up on the NFCI, and then okay, I can start looking for longs. But it works for shorts as well. It's not just for longs. So when the NFCI starts coming down, obviously you could start looking to go short. But I think the long signals are a little more clear to me personally. But that's just me looking at the line. So that's the second tool. Not nothing too crazy, right? It's just a ticker. You don't really have to get into the weeds. You can just keep an eye on it. Something to keep an eye if you start seeing some reversals on the NFCI. Well, obviously you probably want to start looking for a position either long and short in the market. So pretty cool stuff. Dig into it yourself. I'm not here to get into the weeds or explain everything, but just look at it yourself. And then do your own research, start back testing this with the market, and go from there. Pretty cool. And they have a fact sheet. You can read all this. I tried to read it all, but again, I'm too retarded to understand what it's talking about. I'm not a finance guy. I don't know what a lot of this shit means, so I'm just kind of laying it out there for you guys to do more research on your own. That's about it. So yeah, we got that one. This is the NFC website. Again, just type it in Google. And then the last one I want to talk about, this was also brought up by the same guy, Yusuf. Again, he's been someone online that has come out with stuff that I'd never heard of, original things that you can use to trade. And this last one is called the AAII Sentiment Survey. So it's American Association of Individual Investors. So basically what happens is investors from all around the U.S. Will provide their outlook on the market and submit the survey to this website. These guys have been around a long time. You can read about them. It's AAII.com. Once you go to AAII.com, just click the sentiment survey. Once you click the sentiment survey, you don't even have to create an account. You don't got to pay. You ain't got to do shit. Click the sentiment survey and then click more historical sentiment data. Now, I've actually used this and it's come in handy for me, especially if I'm doing a 2, 3, 4, like a weekly trade. This has come in handy. So the report date, October 16th was the last one. So they report every Wednesday. You can come on here every Wednesday and just kind of get a feel for what the sentiment is according to the individuals that take the survey. So we want to look at the previous week, obviously, right? So we were we were more bullish than this week. So we got a little more bullish. And then going and then into the 16th, we got a little less bullish. And why is that? Well, guess what we had? We had expiration, we had option expiration. Obviously, the individuals that take this survey know that that's going to come up on the week ahead. So we're going to be a little less bullish. So price is just going to move up and down. It's going to be stuck in a range. We're not going to get. We did have upside, but we're not probably not going to have huge continuation based on this. So we got a little less bullish. Neutral. We got a little less neutral. And it's important to look at all three, right? We got a little less neutral, but we got a little more bearish. So again, when we talk about these volatility products and we try to tie all this stuff together, these individuals that are going to try to pre-position themselves for the next leg up, in my opinion, or next leg down, whatever you think, obviously they know that to get positioned for the upside, the market's going to have to go down, right? If they're getting positioned for the downside, the market's going to have to go up because the guys, the dealers, or whoever it may be, they're going to be selling puts or selling calls depending on where the market is. That's where they make a ton of their money. So we can kind of tie this sentiment survey into the option expiration calendar. And for the week of October 16th, oh, we got a little more bearish. We got a little less neutral, and we got a little less bullish. So just some information that you can use based on this sentiment. So this isn't the end all be all, right? Like, you know, this the best thing that I've seen from this sentiment survey is when you get these big 10% jumpers, you know, 10% or more, you want to keep an eye on that. And usually that'll coincide with a pretty significant move to the upside or downside depending on whether the sentiment was bullish or bearish. So keep an eye on these numbers. If you get a big bump, 10% or more, week over week, probably going to see the market move a little. Okay, so again, option expiration calendar, NFCI, and lastly, your AAII sentiment survey, AAII.com. Like I said, shout out to Yusuf. I'll share his Twitter handle with you guys. He shared the sentiment survey, he shared the NFCI, and then Jim Carson is the one that got me looking at this option expiration and how certain dates coincide with market reversal. So three tools to look at. Dig more deep into them, especially if you're new. If you have any questions, reach out, and I'll be more than happy to try to answer, or I'll at least point you in the right direction to somebody smarter than me so that they can answer. But I kind of just want to lay all this shit out here because I just keep seeing more and more of these dipshits online and these signal services, and it's just like, fuck, dude, like, these guys are endless. It's like they would sell anything to anyone, and they don't even know what the fuck they're talking about. They have no macro fundamental outlooks. They don't provide anything of value, and I'm just sick of it. There are some good guys out there, but I just want to provide stuff, especially to new guys. I wish I had this stuff when I was brand new. It's super helpful. It would keep me at least hopefully on the right side of the market, or from doing something retarded, you know, going long when I should have went short, especially for a swing trade. So yeah, thank you guys. I hope you enjoy it. And if you guys have any questions, just hit me up. All right, y'all take care. Bye.